So we did develop these sessions in order to be able to educate you, to provide relevant, current, and timely information to the nonprofit community. So we're so happy that we can have all of you with us today. I'm Dawn Laborie. I am a director of audit and assurance with LaPorte and am a co-leader of our nonprofit industry group at LaPorte. I have with me today Anthony Rutledge. He is a senior manager in audit and assurance. We both have had extensive experience with providing single audits to our clients and felt like this was an important topic to bring to you today because many of you may be here experiencing this for maybe the first time. I did want to go over a few housekeeping items. First, we're going to mute our session here, so I hopefully don't have any more feedback, but I did want to let you know that you are all muted, those of you in the Zoom area, and the video is turned off, so we don't have that function available for you. But if you do have questions as we're going through this, we'll take them at the end, and you can go ahead and if you're in the Zoom, you can type your questions in. That's partly why we had that iPad here, so that we can look at those questions at the end. If you're in the rooms, if you're physically present in an office, go ahead and just write your questions down on a comment card that you should have been provided, and we'll take those, the host will take those, and we'll gather those and look at them at the end. So we're all happy to be here via Zoom and in person. And boy, what a couple of years it's been, right? I mean, to say the least. One thing we've learned is that we are resilient. And that's a shout out to anybody who came to our series last year. But we did learn that, and there's so many changes in our world, in our organizations, in our processes, but we adapt to change. And so speaking of change, I'm sure many of you are joining us today because your organization is meeting the single audit threshold for the first time, and or maybe the first time in a long time because of a lot of the funding that's come through. So we're here today to help you kind of navigate through that, give you a higher level understanding of what the single audit is, what to expect. So if you can advance the slide, please. Thank you. So what are we doing today? Let's review that. We want to help you in understanding how to determine if your organization is subject to the single audit, what you should consider when looking at your federal awards, to assist you in understanding your responsibility as an auditee. What is a CFA anyway? When we say that, we'll give you some insights into planning your single audit, and give you an overview of the compliance requirements for the federal awards and what reporting requirements entail. So let's get started. You can advance the slide, please. Thank you. So what is a single audit? I just wanted to give the folks in the room that maybe haven't really dealt with this before a little brief, quick history on the single audit. It was established in 1984, and there's been some amendments over the years that have helped to kind of streamline and improve the effectiveness of the single audit. It was created to provide a cost-effective audit for non-federal entities, in that it's one audit, it's a single audit, rather than having multiple agencies coming in and auditing you for the different grants that they have. It was really trying to streamline that process. It's conducted by your independent auditor. Typically that audit happens in conjunction with your financial statement audit, and it's relied upon by federal agencies, basically for determining your compliance with federal requirements. Next slide, please. A single audit is a comprehensive audit that really contains two parts. First, we have the financial statement audit, and many of you probably are aware of what that is. It's performed under generally accepted auditing standards, and the objective of that financial statement audit is to issue an opinion on the fairness of the financial statements in accordance with generally accepted accounting principles. Now we have a gas and a gas audit here, not to be confused, because they we call it the same name, gas and gas, but the one without the extra A is a gas audit, and that's government auditing standards. We'd be performing your audit under government auditing standards when you have an applicable single audit in play. And so a gas audit, GAS, provides for an additional level of review by the auditors. We're looking at compliance with laws, regulations, and controls over those, over financial reporting. And so a separate report is issued under GAS. The single audit is performed under uniform guidance. Some of you may have known it as OMB Circular A133. Maybe you didn't, but it's now called uniform guidance. And the objective of this part of the single audit is to test and report on your compliance over your federal programs and the controls over that compliance. So it's all related to compliance over your federal awards and those controls that you have in place. We are testing those. Next slide, please. So when is a single audit required? It's when a non-federal entity expends $750,000 or more on federal awards during the non-federal entity's fiscal year. We have emphasis added there on expends, because if you're awarded something, let's just say at the end of a fiscal year, it's an $800,000 award and you've not spent a dime on it, then that wouldn't be included in your total for that fiscal year. And so we wanted to kind of take a look at a couple of elements of this answer here. So what is a non-federal entity? A non-federal entity is a state, it's a local government, Indian tribes, institutions of higher education, and for the folks in the room, it's for nonprofit organizations. Next slide, please. So now we want to emphasize what is a federal award. Okay, so a federal award is the federal financial assistance or the cost reimbursement contract under the federal acquisition regulations that a non-federal entity receives directly from a federal awarding agency or indirectly from a pass-through entity. All right, let's unpack that a little bit, right? It's a little bit wordy, but we're going to take a look at some of the examples of what a federal award is. So if you go to the next slide, we'll see some examples of what does this look like. The first here, these are done by the main categories of awards. So we have grants, which many of you probably, this is the most common award you're going to see, a cost reimbursement type grant. Sometimes they'll give you the funds ahead of time before having to show reimbursement or anything like that. But grants is typically the most common. But we also have some that are maybe not so common, but do occur, and we want to make you aware of those when you're going through this process of figuring out what is my total federal awards. So we have loans, loan guarantees, we have donated property, food commodities. We see that a lot with school boards where they're getting federal assistance through providing actual food commodities. If you turn to the next slide, the list continues. We have interest subsidies, we have insurance, we have endowments, we have program income when you're earning money through a federal program. So it can take various forms, and we wanted you to be aware of that when you're totaling up what your federal awards are for the year, because when you do create that listing and you see that you're over 750, you want to make sure you've got everything included. So also on these slides, we did provide a little cheat sheet, if you will, with a short little definition of what the basis is for determining when it's expended, because sometimes these, if they're not cash per se, how do you figure that out? So we did provide that for you. Next slide, please. All right, we're going to continue unpacking this definition of a federal award. So now we're going to look at what this receives directly or indirectly from a pass-through entity. So it's either received directly, and that's receiving it directly from the federal government. It's just the entity and the feds. They are sending the money directly to you We're corresponding with them. There is no one in between. Indirectly is from a pass-through entity. So you may have another organization that could be a state entity, that could be another nonprofit. It could take various forms, but the money is not coming directly from that federal agency. It's coming through someone else. And that in that respect, you're considered a subrecipient. But I think we need to understand what is a subrecipient versus a contractor, because there is a difference here, because that difference could mean I'm putting it on my schedule of federal awards and adding it to my list of total federal awards for this year, or I'm not. So if you're a subrecipient, and if you're a subrecipient, that means you're an entity that receives a subaward from a pass-through entity to carry out part of the federal program. You're carrying this out. And so if you are a subrecipient, you're adding that to your list of federal awards to see if you get over that 750 mark. And so we have here a little listing with some bullets of some things to help you decide if you are a subrecipient, if it's not clear. Part of it is you're creating a federal assistance relationship. You determine who is eligible to receive federal financial assistance. If you're doing any kind of eligibility to give that award out. It's performance. Your performance is measured whether the objectives of the federal program were met. You're kind of being measured by what the federal program entails. If you have responsibility for programmatic decision-making, if you have to adhere to the federal program requirements that's specified in the award. Also, if you use the federal award to carry out a program for a public purpose, as opposed to providing a good or service for the benefit of the pass-through entity. These are things to consider. If you advance to the next slide, we'll take a look at what the contractor is. And a contractor is a person or an entity that undertakes a contract to provide materials or perform a service or a job like a vendor. The payments are received like an exchange transaction, if you will, and it's not considered a federal award, so that wouldn't go on your listing. And so to go through some of the, what kind of helps determine if you're a contractor, if your purpose is to obtain goods and services for the non-federal entity's own use and create a procurement type relationship, if you're providing goods and services within your normal business operations to that entity, if you're providing similar goods and services to other purchasers, normally you're operating in a competitive type environment here. If you're providing goods or services that are ancillary to the operations of the federal program, if you're not subject to the compliance requirements of the federal program, these are indicators that you're a contractor versus a subrecipient. If you go through this process and you're still unsure, I recommend calling the funder to see how they are treating you. If you're able to do that, to talk to that person that you have there, just to be clear. But just sometimes there's haziness, and this can help you determine that. Next slide. So I wanted to point out some of the new funding or different funding that has come through in the last couple of years that you could be in this room having received, and that this may be the reason why you're having a single audit for the first time or the first time in a long time. So we've listed some of the newer programs. There's the Coronavirus Relief Fund, Emergency Rental Assistance, the Coronavirus State and Local Fiscal Recovery Fund, Education Stabilization Funds, the Provider Relief Funds. So if you're receiving these, some of these may be new programs. There's also numerous existing programs that have been around for a long time, but you have a component now that's through COVID relief. It's specific to COVID-19. And if you have that, then that needs to be separately identified. You need to, when you're creating your listing of federal awards, which is called the Schedule of Federal Awards, or the CFA is what we call it, you're going to have that program listed twice. You're going to have the same identification number which used to be called CFDA number. It's called assistance listing number now. If I say CFDA, it's because it's just ingrained in me, but it did change. So it'll have the same number, but you have to show it and identify it as COVID-19 funds. So that's important to remember. I also wanted to point out provider relief funds is a little unique in that they have unique reporting timeframes, which may be a little different from when something is expended. It's pretty detailed, so I didn't want to take time to go through that, but I do have a link on here to the AICPA. It's a Q&A, for lack of a better term, document that basically spells out when do you put the PRF funds on your CFA. And I suggest you take a look at that if you have any questions on that. And a comprehensive listing of the COVID funding through various means. We have a link to that as well, because I only scratched the surface here. So, but that is new. Consider that in building your listing of how much federal funds you have this year. Also, FEMA disaster assistance. Who in here has experienced a natural disaster in the last 2 years? I think everybody in the room, from Texas to Louisiana here, we've all had some things happen. And tornadoes, hurricanes, ice storms, just keep the list coming. So you may have received some FEMA funds or spent some money in providing that. Make sure you're including that on your list, because that's something that's recent. This may kick you over into meeting that $750,000 minimum and having to have a single audit. So next slide. So what are your responsibilities as the auditee? I've gone through my programs. I've figured out if I'm a subrecipient or a contractor. I've figured out all the different types of awards that I have. I've compiled this list. Now what? What is it that what's my responsibilities here now? So there's 4 key areas that you're responsible for as it relates to what's in uniform guidance. And the first is to procure or arrange for the audit that's under 2 CFR Part 200, which is just the technical term for needing the single audit, right? So if I have an auditor already, I'm going to call my auditor and say, look, I got over 750. I'm going to need you to do a single audit now. So you're going to reach out to your auditor. If you don't have an auditor, you're going to find an auditor. We're here to serve you if you need that. But so you would arrange for that, make sure you're alerting your auditor for that. You would prepare your appropriate financial statements, including the schedule of expenditure of federal awards. So this is that list I keep referring to. It's called the schedule of expenditure of federal awards. You are providing that to us. That's not us building that for you. You're the one telling us this is all my federal programs. At a minimum, this schedule must have a list of the individual federal programs by federal agency, including the assistance listing number, formerly known as CFDA number, and the title for each. If you have a cluster of programs, I've seen this a lot with school boards, hospitals, you might have a cluster. Their program, it will be a group of similar programs. Those would need to be shown together in a total. The name of the pass-through entity and identifying number if you received it as a subrecipient. So I'm not getting it directly from the federal government. I have somebody who got it from the feds and is giving it to me. I would have to list who that is that I'm giving it, who's giving it to me, as well as any identifying number that they have. Some do have like a pass-through number for you, so you would put that on there. You would need to put the total amount provided to subrecipients from each federal program. And that, so you would have to have totals by the federal program, that assistance listing number, and notes to the schedule of federal expenditures of federal awards. So much like your financial statements, where you have your statements and then you have notes that explain it, a schedule of federal awards is similar, that you have notes to explain it. At a minimum, you should have your accounting policies that are used in preparing the schedule. So if you're doing it on accrual basis, because if you're an accrual basis For your financial statements, you would be doing your CFA in accrual basis. If you're cash basis, you would be doing it under cash basis. You need to indicate which basis that you're doing it under. Whether you're using the de minimis cost rate, if you do have that built in where you have indirect costs in your awards, you would need to state, I'm using the de minimis cost rate or I'm not using the de minimis cost rate. And then if you have any loans or loan guarantees, you would need to put the balances for those in there. So seems like a lot, don't worry. We do have a little example later that you can see what one looks like, what it would entail. Just a little snip of one to give you that idea. Next slide. All right, and what else do you have to do? So you should promptly follow up and take corrective action on any audit findings. So if the audit is done and there were some things found, maybe some non-compliance that needs to be reported, or an issue with controls over the compliance, then you would have to address that, and you would be preparing an action plan and say, this is how I plan to take action on this finding. We're going to change this. We're going to implement that. This has got to come from the auditee, and that is given to the auditor to put into the package. And you would provide the auditor with documentation and access to your books and records, making sure that we have access to your grant administrators. So those folks that are in your entity that administer your grants, that take care of compliance, that really know that grant well, we need access to those folks as well to have those conversations to understand what controls are in place and things of that nature. So you should have those designated folks made aware that this audit is going to be happening and that they would be involved as well to be ready for those discussions. So getting everything ready, grant documents, grant agreements, all that good stuff. Your general ledger, you put a total on your schedule of federal awards and said, I have $500,000 from this assistance listing number program. As an auditor, I'm going to come in and say, well, show me what makes up that $500,000. So if you don't have that in your system already to be able to pull that information, then start working on that. But that's the types of things that us as auditors are going to be asking for. So that means you need to be prepared, right? So I'm going to hand it over to Anthony, who is going to help you navigate through preparation.
Thank you, Dawn. No pressure if I don't leave you prepared, right? So, couple of quick things that were sent over to me as far as housekeeping things. I wanted to promise you for any of the links that we have in these slides and for anything that we go over, we're going to get that out to those that are on Zoom. I don't think there was a way to download it beforehand, but we're going to send that out to everyone afterwards. And after the end of this part of the session, we'll have the Q&A. If you put it on, if you put your questions on the actual Q&A pod in Zoom, and the handwriting here as well with the cards, instead of chat, we can see it easier. If you put it in chat, we'll go there as well. But if you can move your questions over to Q&A, that'll help us kind of go down the line and look at everything together. Dawn explained everything you need to know, so I could probably just leave. But what I'm going to do is try to reinforce some of the concepts that she started with here and go through some general examples, starting with the next slide, Travis. The snippet here that Dawn was kind of talking about, this is the CFA, right, or a piece of the CFA. If you have 1, 5, 10 or so programs, your CFA might be 1 page long. If you're a large organization, your CFA could be 10 pages long, 20 pages long, depending upon the number of locations where you receive your federal funds from. This also does not include all the columns that Dawn was talking about, where your CFA is at a minimum required to include some of these components, but there are other elements that might be relevant when you're putting it together. But just to walk through visually a few of the things we were talking about there, this excerpt is from the state of Louisiana, which is a publicly posted single audit that you can find online. State of Texas also has one, basically any state agency. And you can see theirs goes on for dozens and dozens of pages. But to drive home an example of both clustering and in general COVID-related funds, if you look on the far left-hand side, you'll see the description of the actual program that the entity is listing as what they receive their funds under. And that listing number, that name comes from that what was formerly CFDA, Catalog of Federal Domestic Assistance, now Assistance Listing Number. And you can tell it's so ingrained in us, like she said, we still have CFDA in our example here, but we'll get that changed going forward. So the Assistance Listing Number, right, is prescriptive. It comes from the federal organization. It is verbatim. The only difference going into these years with COVID and pandemic response is if the issuance was under COVID, you have to add that COVID designation, just as Dawn was describing. The CFDA number, or excuse me, they said there it is. The assistance listing number is also prescriptive, right? That number comes from the federal agency, and the amounts that you expended, those are those CFA amounts that you're putting together, those amounts from your own internal records that are ultimately building your CFA. And then on the far right-hand column, the amounts that you're reporting as passed through to subrecipients. And I promise to drive home a few topics. So first on that piece, right, subrecipients versus contractors. All right, you do not report amounts paid to contractors on this schedule. You only report amounts paid to subrecipients on this schedule, which is why that designation and the process of understanding that designation is so important, both to the grantor and to the grantee. And going into the next slide, I'm going to start with explaining that just like Dawn said, there are a lot of items that happen, a lot of things that happen when conducting a single audit, and sometimes confusion as to where that ultimately comes from. And driving home a point Dawn made is the only thing that the auditor ultimately provides you in the end is an opinion, right? An opinion on the CFA, under GAS, under your financial statements, and under the compliance rather of your federal program and tracking and expenditures. Everything else ultimately has to be built from the organization's records. And we're going to go through some of that here. So as far as building a CFA, Dawn started on this, reconciling expenditures, right? Ways a lot of organizations do this are through projects, classes, cost centers, something in their ledger that allows them to earmark an expense for a particular grant or a particular program or particular purpose, right? Reason for that being double dipping rules, right? Federal government does not allow you to double dip with their programs. There are occasions where you have to receive funding from a variety of sources, but federal programs do not allow you to get paid for the same dollar twice. So it's important to track the expenditures that you're incurring for the respective programs to make sure that they're not ultimately claimed under two programs accidentally. Another thing to talk about regarding the second bullet point is the accrual process over those expenditures. I would imagine most of the folks in the rooms and on Zoom are GAAP audits, right? Financial statement audits under generally accepted accounting principles, which means you use the accrual basis of accounting. There are circumstances where you're not, where you're cash basis of accounting, but your CFA follows what your accounting is. So if you are an accrual basis of accounting entity, your CFA is accrual basis of accounting. Why is that important? Just like Dawn talked about from the cash flow perspective or from the grant issuance perspective, if you receive a grant for $800,000 at the end of your fiscal year, on the last day of your fiscal year, and even if you got the money potentially on that day, that does not necessarily mean you are a single audit. What means you are a single audit is if you had expenditures associated with that money during the fiscal year that you're going to have reviewed. So continuing that example, you get your $800,000 grant at the end of the year. It's December 31st. The money comes in the bank because you have a direct award with the federal government where they give it to you in advance. And you spend $749,999 of that on the last day by claiming payroll that you've paid out over the past year under that grant. Are you a single audit? The answer right now is no. Because you did not expend more than $750 during the year, even though your grant was $800,000. However, we're accrual basis of accounting, right? What about your payroll accrual at the end of the year? The payroll accrual that covers your year end that you're about to claim under that, they really got paid out on January 3rd or January 4th. When you add that in, even though you didn't pay it, even though the cash went out in 2022, that expenditure, if you claim it in the fiscal year of 2021, that gets added to your fiscal year 2021 CFA, pushes you over the $750,000 threshold. Now you need a single audit, right? So the importance of tracking the timing and mirroring that timing to your internal financials is critical. And then again, earmarking the expenses as they come in, as you incur them as you record them as expenditures to make sure you're tracking them program by program. And then again, driving home the point of grant award notifications or GANs and amendments, a couple different types of amendments that might be relevant to your auditors. No cost extensions. Generally, no cost extensions are just keep doing what you're doing. You're not getting more money from the program, but we're giving you more time to spend the money. You might have budgetary changes, right? During the pandemic, there were a lot of budgetary changes because programs that were previously thought to be viable couldn't be done during 2020 and 2021. So entities had to seek changes in that space. Correspondence with federal agencies, some things that would be relevant to giving your auditor up front. Did any of the agencies come out and audit you anyways, right? Even though it's called a single audit and the goal is making sure that your local auditor and an auditor from a firm can conduct this audit on behalf of the federal government's needs, there are times where the federal government will still come in and say, hey, you know what, we're going to come look at this anyways. And they have the complete right to do so under your grants. If they do that, usually called a desk review or an elective review, that report is required to be given to your auditors as well, because they're for two reasons. There might be some testing there that has to be reflected and some results that have to be addressed in the financial auditor's procedures, or it might ultimately conclude that you can reduce the risk over that program and not test it into that year. So definitely share any of those results with your auditors. And the last piece on this bullet on this slide about written policies, we're going to go over on the next slide as well. But I wanted to point your attention to the fact that it is underscored, and that's because it's extremely important. So on the next slide, the OMB compliance requirements require that policies, procedures, et cetera, be written, right? That means they could be written on a napkin, but of course that wouldn't make sense, right? Let's put them on paper, let's put them digitally, but they need to be written, and they need to be written because written policies can be followed easier than unwritten policies, right? But it's also because your requirements and organization's requirements under the OMB guidance are the same as any entity under the COSO framework. Those 5 bullet points at the bottom we're going to go over, but these bullet points are the foundation for what's called the COSO framework. It's the framework on which internal control environments are built. And you recall Dawn saying, we're not just auditing your compliance. We're not just auditing compliance over programs. We're auditing internal controls over compliance as well. 2 very distinct things. So we're going to kind of unpack this and what it means a little bit here. So under the COSO framework, you've got 3 key areas that you're required for identifying internal controls and crafting internal controls that respond to the way your organization conducts its business. Those are from an operational perspective, a reporting perspective, and a compliance perspective. There's that word again, right? And these 5 areas are the way that you do that. The first is through establishing the control environment, again, on paper that makes sense for you. Ethics policies, tone at the top, establishing that understanding, building a hierarchy of reporting, training your personnel properly under what their requirements are for these grants, having a grant administrator that knows the grant, right? That's all part of the control environment and making sure that foundation to this framework is established. Your auditor will walk through that understanding with you when they conduct a single audit. Risk assessments, right? This is one that's usually not always known at the entity level, that there's an obligation. They think the auditor's the one that's assessing my risk for me, right? You have an obligation internally to assess risk of non-compliance and risk that the controls over non-compliance will fail under a single audit, much like you have the responsibility to do the same for your financial audit should errors or such happen on the financial audit side. So that risk assessment process is very important. Who's reviewing what? What could go wrong? How do we talk about during board meetings and management meetings what could go wrong, and how do we respond to that? I'm going to skip control activities for a second because I'm going to pretend like that's on the bottom real quick. Information and communication. Main thing to take away there, that's both internal and external, right? Drafting policies that cover how you deal with information internally that's generated, right? Expenditures, et cetera, and how you deal with communication externally, whether it's vendors, customers, and ultimately the federal government, how you're communicating to them your compliance and your compliance requirements as it relates to the scope of a single audit. Monitoring. Much like in the risk assessment phase of trying to predict what's going to happen, in the monitoring phase, you have to go through and try to detect what did happen, right? Those two words are also key. Controls have to be preventative or detective in nature to be a control. If they don't have a preventative or a detective component, they're activities, but they're not control activities. So if you designed a risk assessment process to figure out what could happen and you miss something, that's okay. That's where the monitoring component comes in, and you're able to detect what happened by proper review, proper documentation of that review to show due diligence over that. And then ultimately going back to bullet 3, control activities, the things you're currently doing, the existing activities that are embedded in policy and procedure that your team members, your grant administrators, your finance personnel can follow to make sure that the compliance is being tracked and that the controls over compliance are being performed. On the next slide, we're going to keep going into the compliance supplement. We've talked about the CIFA. You now, if you're following along and pretending like you're doing this right now real time, we've got a CIFA built, right? We know the framework for it. We know all the policies and the procedures that we're supposed to create. And now we're going to go and turn that over to our financial statement auditor. And they're going to use this guy right here, this 1,800-page compliance supplement that's linked to you in that first bullet point. And I promise you, I talk fast, but even I could not get through all 1,800 pages on this call. But we are going to hit some of the key elements of this compliance supplement, because even though auditors use it as part of testing programs for organizations such as yours, it's technically your compliance supplement, right? It's the government has told you what you have to do to be compliant with the grants. There are steps for auditors in here too, but we're going to walk through a few things here that could really help you when building your CIFA and really make it to where it's not as intimidating when you open up this document, right? So when you first open it, and it has 8 components. So we're going to go through a few key areas, or 8 parts rather. We're going to go through a few of those parts. Starting with part 2, part 1 is just a background. Part 2 is a matrix of compliance requirements. That second bullet point there talking about the 12 compliance requirements. Each program has its own set of compliance requirements that the federal agency who issues the grant says auditors have to do this, right? At a minimum, they have to do this. There's usually 6 of them that it's a rule of 6. There's at least 6 of the 12 that are selected. And we'll go over that on just a little bit. But know that those requirements for the auditor to test are not necessarily the only requirements you have under the grant. So if you go to the matrix of compliance requirements, you might have a matching requirement under your grant. You might have a public-private partnership where you have to receive money, but your auditor may not be required to test it. That doesn't mean you don't have to have controls documented over it to ensure that you're taking that matching and reporting that matching properly. In part 2, back to talking about the matrix, in part 2, you have that assistance listing number that we talked about. It starts with 2 digits with a period, ends with 3 digits. That number comes from your grant award we talked about earlier. You can find that exact number usually on this compliance supplement. If you can't, I would tell you 2 things. 1, find the one that's closest. That doesn't mean that it's relevant, but it gives you a starting point. But there's some new programs that haven't been added, or some programs that the government doesn't have exact guidance on. And if it's not listed there, then you go back to the grant award and you build your compliance requirements from there, which is exactly what a financial auditor would do. Continuing down with the parts, part 3 and 4, parts 3 and 4 in the compliance supplement list what an auditor has to do and what an entity has to do to be in compliance with these 12 requirements. There are steps there that literally say suggested audit procedures, right? When an auditor conducts your audit, they will go straight to those to understand their requirements, and they will come to you. So I encourage any organization to read it, because if you know what the auditor is ultimately charged with testing, and you know what your controls are that you have to document right over these particular compliance areas, you know exactly how the audit's going to go. Continuing down, part 5, if you're in that document, part 5 is the clusters that Dawn talked about. There are programs that have to be combined. The main thing to think about with regards to that is you might at times have smaller programs that individually aren't subject to testing, but when clustered together, have to be clustered together for testing. Similarly, if your auditor comes and pulls a program for testing and you don't report that it's a cluster and they find out that it is later, they got to do more testing because they got to go and incorporate those other clustered programs all into one bucket of testing. Part 6, my favorite part. Part 6 is a listing of control activities. Remember the COSO framework on the previous slide, right? You got the 4 elements of establishing the framework, and then you've got the activities themselves. Part 6 gives examples for organizations and for auditors of how to document internal controls. If you're coming or struggling to come up with ways to document your preventative and detective controls over these 12 compliance areas we're about to go over, highly encourage thumbing through this section. Might give you some thoughts on ways you're not thinking about a particular compliance requirement, or it might reinforce the fact that you've got everything covered. And all controls are not created equal, right? Organizations with 20 people in their accounting staff have controls that are different than organizations with 2 people in their accounting staff. But know that this gives you a lot of great ideas to start with and to build your control environment based on. Next slide, please. We'll cover the compliance requirements I was just talking about. So you've got A through N listed here, which if you're counting in your head is not the number of digits between A and N. There's only 12 items up there. That's because a few have kind of evolved or devolved over the years. So know that the abbreviating letter is only an identifier in the compliance supplement, just an easy way to cross-reference to the matrix we were talking about, the matrix of compliance requirements. So what we're going to do real quick is we're going to say, we're going to go through these 12 components here and give you some brief examples over things that you should be doing internally and things that your auditors will be looking for whenever they're testing these compliance requirements, right? So following through, we built our CIFA. We've reviewed the compliance supplement to make sure we've got awesome controls put together to support our position on how we conducted track compliance properly and perform controls over that compliance. And now our auditors coming in and they're looking at these elements in that matrix to say, what does an auditor have to test, right? So A and B, let's start with those. Those are commonly looked at together. Activities allowed or unallowed and allowable cost principles. The summary of A and B is, what did you spend the money on? What did you buy? What did you get? What services did you receive? Whose payroll was covered by this program? There are other elements to it. There's prohibited items. There are some unique cases on a grant by grant basis, but know that under A and B, your auditor is looking for how you spent the money and what it was spent on to test compliance. But not only that, how did you track that that item was allowable when you went to go request reimbursement for it, right? For most in the rooms and online, I'm assuming you have reimbursable grants. So you receive the grant via a local or a state agency, and you have to submit a report and that says, this is what we spent the money on. Please give us a drawdown. Please give us some of our funds under this federal grant. That's reimbursable, right? It's the easiest one to track, easiest type of grant to track because you've already got the list of costs that you've promised have been earmarked for this program. What did you do when that list was built to ensure that that item was an allowed activity? Did a grant administrator review it? Did they log that review? Was it earmarked in the general ledger under a custom cost center or a custom class in some way? Those sort of items are controls to prevent and detect the potential for error in the reimbursement request going to the party that's going to send you the money, right? Cash management. Continuing that thought, if you didn't receive a reimbursable grant, maybe you were, a pass-through grant, perhaps you have a direct grant with the federal government itself. One of the, I don't call it benefits, but one of the circumstances around a direct award is usually the federal government allows you to draw the money down first. There are rules around that. You can't keep the money for more than 72 hours before expending it, things of that nature. But know that cash management is all about exactly what it sounds like. How do you control the cash that comes from the federal program? How do you ensure that it's going to be spent for the right reasons if you did draw it down early? And if any of it is earmarked under a reimbursable grant after you receive it, how does it have to be tracked afterwards? Usually that's not the case because you've already spent the money under a reimbursable grant. Eligibility, becoming less and less of a responsibility at the organization levels, the nonprofit level, but occasionally it still is. State agencies are largely taking over this role because eligibility is usually about pre-vetting who the money is going to go to. The money under your programs, who's going to be the recipient of it. Classic example is perhaps WIC or SNAP funds, right? Funds that are designed to support moderate to low income. Nonprofits in the past used to have a responsibility for tracking and testing income and keeping some of that data. All the PII risks and rules, the personal identifiable information, have shifted that responsibility usually to the state level. So most of the time this doesn't happen at the nonprofit level, but worth double checking to make sure if any of your grants have this compliance requirement. F, real quickly, is about equipment and real property. Most grants don't have this anymore unless you have a transit program or some sort of FAA program. But if you bought any equipment or real property, land, buildings, et cetera, with a federal award, know that this would be applicable to you. G, matching, level of effort and earmarking. Most relevant component here is usually matching, because we see a lot of public-private partnerships starting to happen at the nonprofit space, where the government is saying, we'll give you X, you put in X or procure X from other locations, and you can build your amazing nonprofit using the federal monies in conjunction with these other monies. Period of performance. This goes back to our accrual basis discussion we were having before. When was the expenditure incurred? When was it tracked? When was it paid? And was all of that documented and recorded appropriately and requested under the grant appropriately? Procurement, suspension, and debarment, bullet I. A unique area and not one that usually requires a lot of understanding and testing, but know that there are organizations out there that are not allowed to do business with the federal government, and there's a listing of them. At a minimum, you want to make sure you're checking any vendors or sub-recipients you might be working with to make sure they're not on that list. That's the main thing to know there. There are other unique components at times for nonprofits and their grants. Program income. At times, federal programs can generate money, meaning the service or the unique circumstances around it are not just reimbursable in nature, but they allow you to use those monies to then charge a service to the public or to another organization. If that is the case, if you have any program like that, know that there are very unique rules in terms of how you track those extra monies, right? They're not just general monies that go over here into a bank account. You have to track those to potentially reduce your obligation to the federal government, your ability to draw down funds. So program income matters are unique to certain sectors at times, but they are heavily involved in the nonprofit space because there are nonprofits out there that are able to generate revenues from these federal grants. Reporting, how do you report to your subrecipients? How do you report to your agencies that granted you money? And how ultimately does that get reported up to the federal government through budget updates, budget amendments, and through ultimately financial reporting summaries, usually that happen on an annual or at the end of the year. Main thing there for those that have passed through grants, reimbursement requests. Reimbursement requests have to be logged, tracked, signed off on, executed, in some way supported by the fact that they were reported properly and through the right channels and timely to the parties that need to see that in order to continue working the federal grant. Subrecipient monitoring. We talked about this earlier, and so did Dawn with the contract versus subrecipient discussion. Know that any subrecipient that you have under your grants usually requires a couple of things. One, an actual award, right? If you're going to treat them as a subrecipient, you have to grant some version of an award, could just be a letter explaining that fact. But you also have to communicate their responsibilities to you, right? To let them know they are now subject to all of these requirements under this grant. Because if they are a subrecipient, they have the potential to go through the exact same process you're going through. Just like you might be as a subrecipient to a state agency or to a local agency, you're going through the same thing that state agency is going through. And that ladder, that hierarchy of reporting is critical because as we saw in the CFA example earlier, you have to track that. You have to track those award numbers all the way from the entity you ultimately receive some of the funds all the way up to the federal level, so the federal government can trace that all the way through. And then lastly, special tests and provisions. They put this bullet in there, they put this section in there because after all this thought process and all the 1,800 pages of the compliance supplement, at times there were still some federal agencies that said, you know what, my program is pretty unique, and here's why it's unique. And I want the auditors and the agencies who receive the funds to do something unique. I want them to track this particular metric. I want them to report this particular event. And it doesn't necessarily fall under any of these areas. Know that if you have a special test and provision, it could be anything, but make sure to read it, understand it, document it, and document your process over it, so because your auditor is going to have to test it if it's applicable under that matrix. All right, on the next slide, I told you I had the fun part, right? We get to talk about all the technical. On the next part here, right? So now continuing where we're at in the process, you've built your CFA. You got really comfortable with your internal controls. Your auditors come in and identified with you all of the required components they have to test. They've come in and they conducted their test, and because you attended this class, you have an unmodified opinion and everything's great, right? Driving home the very first point Dawn made about that is that's ultimately what we give you at the end. We give you an unmodified, or if you have results, perhaps modifications or results along the way, but again, you attended this, so you won't have any. That package is what you ultimately have to affix to everything else that you put together, right? Your financial statements, your CFA, your notes to your CFA, your notes to your financial statements, right? That entire package gets put together as one. So following those bullet points, if you were reviewing your own financial package this coming year, say if it is your first year as a single audit versus the year before, how will it look? You're probably used to seeing your opinion at the very top of your financial report. Usually it's on the first couple pages. Your financials behind it. And then in the back, if you've received state or local government money in the past, but not federal money, you might have had the GAS report that Dawn was talking about, the government auditing standards, also known as a yellow book report. That's reporting over internal controls over your financial reporting. So it is more directly connected with the financial statement audit. After that, you'll now have, under your first year single audit, or if you've already had one, another report behind it. So even though it's called a single audit, you do have 3 audit opinions and 3 audit reports kind of going on, but at least it's all in one place, right? So the third audit report is the report over the major federal programs, the compliance, and again, the internal controls over compliance. And then your notes and your schedule of findings and question costs and prior audit findings will be right behind that. All right, and the only thing you have to do after that is ultimately submit the package to the required governmental bodies, right? You do have to, usually in states, Texas and Louisiana both have their own reporting requirements to submit to the local or the state agencies. But after everything's done, you do also have to submit to what's called the Federal Audit Clearinghouse. Your entire package, not just your single audit, goes to them, where you basically it's an aggregator for all the data for everyone across the country over how the money was spent, where the agencies that reported it, all the findings that were there, and then they use that to kind of better understand how single audits can be performed in the future. And so after you upload that, basically you're done unless they send you any questions. And with that, I will dovetail into, do you have any questions for us?
I do have some. If anybody has any and they're typing them in now, I do have a couple ready, so we can go over those. Let's see. So I had a couple of comment cards here. So first, how does an endowment, how do endowments get included as a federal award? And so this would be something that's pretty unique, that it would be federally funded endowment. Think about the National Endowment for the Humanities, for Arts, things like that, where it's the federal government that's funding the endowment to give out grants and awards and things like that. So if you have a situation like that, then that would be included. I don't see it too often as as an auditor. It's not something I've come across, but just wanted to make you aware that there's those types of arrangements.
Real quick, Travis, if you advance to the next slide, we'll have our emails up there for you as well, just in case something comes up afterwards, and you can go one more. Sorry. That's just the clearinghouse we were talking about. There we go. Just in case questions come afterwards as well. So, I think I was 24.
We also have 24. I was 18. So that's right. If I'm creating a SEPA for the first time, is there a resource I can go to for a template of a SEPA and instructions for components that are required versus optional? So if you go, so you can Google has a lot out there, right? But there is the AICPA Governmental Audit Quality Center. If you go to there is an actual auditee practice aids, and there's something in there for specific to the schedule of expenditures of federal awards. So if this is your first time building it, you want something to kind of guide you, there are questions within this template that kind of help you build it. So I would encourage you to go to the AICPA Governmental Audit Quality Center. You can Google auditee practice aids, and it likely would come up pretty quickly on that search function. I think you had addressed the question of the handout being available for the presentation earlier, but that will be provided to the folks in attendance. And is there any, I don't see anything else in the question box, so I'm going to assume that everybody's been well schooled on what a single audit is, more than you ever wanted to know. So I just want to thank everybody for coming. And we do have a couple of future sessions that are in the works, and you should be getting invitations to those as well. We plan to be talking about building a better board. So that should be an interesting topic. We have folks here that are board source trained, and so we have folks that can really speak to that. And we have the a session on financial sustainability, program effectiveness, and that type of area. So be looking out for those invitations to come in the near future. And we do appreciate you all for coming. If you have anything after this, if you think of something, that's our information. It'll be on the slides that we provide to you, but feel free to reach out. We're happy to speak.
Hand me that. I just saw something.
Oh, yes.
Can we open it?
Oh, something did pop up. Let's see.
I'll walk across the camera.
Oh, thank you, Holly. I just got to thank you so much. This was very informative. I do appreciate that comment. But again, if you do think of something afterwards, we're happy to speak to you about it. So I think that would end our session. And so the people behind the curtain. Well, I appreciate everybody attending. Thank you.